Hello again and welcome to my video. In today's video, I'm going to teach you how do you actually avoid making mistake while trading cryptocurrency. I'm going to give you 5 mistakes that beginners do while trading cryptocurrency. So if you don't know me, my name is Musti and I share with you videos about cryptocurrency, teaching you how to make money every day. So if you like the content, hit that like, subscribe to the channel and follow me on Musti Crypto. Now I know I don't have a lot of followers, I'm not the kind of rich guys who's got thousands of followers, but trust me, I share all the rich content that you really need to know every day. So if you like it, just follow me on Twitter and you will get all the update instantly. So without further ado, let's hop into the video. Hello and welcome guys again. If you're new to the video, then a massive welcome. In today's video, as I told you, that we are going to give 5 tips or 5 mistakes that beginners do while trading cryptocurrency. So I want to show you something before I even start telling you about what are the mistakes that people used to do while trading cryptocurrency, right? So if you look at my screen, and to be honest, I've been trading for years, alright? Like, it's been more than 3 years I've been trading, and I still have this background on my computer saying that always trust your analyzation, never close trade for any reason, do not trade emotionally, focus on coins you want to trade, and make a trading plan. I've been trading for years, and this was always my approach. Every day I wake up in the morning, I look at my screen, and I remember that I should not make those mistakes. So on the list, mistake number 1 with us is, what kind of trader are you? Alright, so you must know what type of trader you are, right? So most of the people, they just think that trading is all about analyzing or reading the news. So if I know that let's say Elon Musk or some figure that has a control on the cryptocurrency is going to buy a chunk of this coin, for example, or a YouTuber mentioning a coin or an alt or Bitcoin or whatever instrument right there in the market, then I just go and put my money in it and I become millionaire. This idea is wrong, alright? What I need to explain to you right here is something that you all need to know before start trading. So I need you to focus, and I would appreciate it if you finish the video to the end. Now, the first thing that you need to know is, are you a fundamental trader or analysis trader? So do you analyze the chart and use pattern to get your profit according to the price actions and a few patterns, or do you actually follow fundamentals, or do you even do both? So let me give you a short of what I'm talking about. Sorry. So right here, fundamental traders, all right? Traders who use fundamental analysis to perform a stock evaluation. So it's no matter a stock, cryptocurrency, Bitcoin, Ethereum, it's all about the chart. Data related to the current economic environment, to the company, financial health, and company's competitors. Traders use the data they uncover to determine a stock intrinsic value by determining if a stock is undervalued, overvalued, or correctly priced. A trader can evaluate the stock for its potential as a profitable investment. Now, this is what we mean about a fundamental trader. So let me give it to you in a simple words, all right? Now, fundamental traders in the simple words, which means that you follow the news, which means, I'll give you an example. So the Russian, that we all know that there is a war that's going on between Russia and Ukraine, right? And this war has a huge impact on the cryptocurrency market. So what a fundamental trader would do, take advantages of this information and apply them on the chart by taking a short on any specific instrument such as Bitcoin, Ethereum, or whatever instrument is there. That's by taking an advantages of the market situation according to what the news is. That's a fundamental trader. Now, the second type of trader is a technical analysis trader, which represent myself and a lot of people. So me, I'm a technical analysis trader. What do we actually do? So a technical analysis is a trading discipline's employee to evaluate investment and identify trading opportunities in price trend and patterns seen on the chart. Technical analysis believe past trading activity and price changes of security can be valuable indicators of securities' future prices movement. Technical analysis may be concentrated with fundamental analysis with focus on a company's financial rather than history price patterns or stock trend. So basically what we do is we go to the chart. All right, I'll give you a fast example. We go to the chart, look at the chart. Maybe the chart is giving us some kind of trend line breakout, is giving us support and resistance, giving us like example here. I'll give you an example on the Bitcoin. If you move to the 1 hour chart, we have a head and shoulder button, right? So we see it right here forming head and shoulder. So these are the kind of buttons that technical analysis traders take while trading Bitcoin. So this is a very important point that you should put in mind, that what kind of trader are you before you even consider to take a trade. All right. Moving on to the second part, the second mistake that beginners do while trading cryptocurrency is risk per trade. So a lot of people ask, what is risk per trade? All right. Maybe I know how to manage my risk. I use 1% of my wallet, and if I lose, then I lose 1%, and then I still have 99%. Now in here, I've drawn for you a funny, and I'm sorry for my drawing, it's not that good, but I've drawn something for you that's gonna make you understand what is a risk per trade. All right. So right here, you are a heavy trader, okay, who owns $400. All right. So your budget is $400, and you want to start trading with $400. You came to the chart, you walk in, you found the chart, and then found 4 trades. In total, you found 4 trades. And then you trust yourself enough that you're gonna take those 4 trades, right? So we made a table of the first trade, second trade, third trade, and fourth trade. So what we're gonna do is divided our capital on 4 different trades, right? So we have trade $100, another $100, another $100, and another $100, right? Because we invest $100 in each and every trade since we have $400. Now, when we trade as traders, we have something called RR, reward to ratio, risk to reward. Risk to reward. All right. I'm sorry, guys. So risk to reward basically is that how much are you going to lose, then how much are you going to win, right? So on the chart, if you move in right here, let me give you an example. All right. So there is a trade that I was taking. So let's say we want to take a long position, right? So we have the red bar, we have the green bar, we have risk to reward ratio. So what is our risk to reward ratio? In the table, we are representing a risk of reward ratio, which is 3 to 1. What does this mean? This means that we either lose all the money or we win 3 times our money. Am I clear here? Okay. So in the first trade, we've gone with a trade of 3 to 1 risk to reward ratio, and we won $300. In the second trade, we took the same ratio, but unfortunately we closed on the second target because price action of the market was not given a positive vibe. So I just closed my trade with a $200 profit. Unfortunately, in the third trade, it went to my take stop loss, and then I lost $100. And in my fourth trade, I lost another $100. Now, in the first 2 trades, I've made $500 in total, right? I've made $300 and $200. So in total, I have made $300. But in the second trade, third trade, and fourth trade, I've lost $200, right? So in total, my general profit is how much? Is $300. Now, when I started with my $400, how much do I have in total right now? I have $700 in total. So I won 2 trades and I lost 2 trades, but I still maintained to make $300. This is risk management, guys. If you don't know how to manage your risk, then you should not trade at all. You should learn, because this is the first principles, this is the first rule of trading in the cryptocurrency market, is to know how to manage your risk. Because if I tell you a story about myself, when I first started trading, all right, I saw my friend came to me to the house. He opened a trade with like $1,000 or something. I don't really recall that. And in a few seconds, he made like $100. And I was like, dude, this is crazy, all right? I'm going to put my money right now. So I put in $50K. And I started with my money. Eventually, I've lost all my money, all the $50,000. And in my position, I really don't want you to feel what I felt those days, because I really could not sleep. That was my initial investment. That was the money that I have worked so hard to get, and I all lost it in a stupid move. And this what made me actually make this video for you guys, because this video is useful for you to teach you the mistakes that other traders have done, and in order for you to avoid making those mistakes. Now, moving on to the third mistake that traders do while trading cryptocurrency is the trading plan. So, all right, where's the trading plan? Come on, I open the chart, I look at the chart. If I see bullish patterns, then yeah, I take a trade. That's it. Let me give you an advice. The first website that I use before trading cryptocurrency or before trading anything, once I wake up in the morning, I use two different websites. First website is called Crypto Bubbles. All right, I'll leave the link in the description. What do I actually get from this website? In this website, it tells me which coins are bullish and which coins are bearish. So right here, if you look, we have Luna raised about 47%, let's say 50%. We have AR raised up about 20%. We have ANC rise about 54%. We have Waves around 27%. Now, maybe you're gonna ask, how am I gonna take advantage of it? They already bumped. What I do is, that's my approach. I will look for the coins that dumped a lot and try to figure an entry for them. Such as, I'll give you an example. Cake, it's been dropping so hard, so I'll go for Cake. Maybe I'll go for some coin that drop a lot like Hex. Maybe I'll move to LRC, one of those very undervalued cryptocurrency that people don't know. I'll move on to Waves. If I see an opportunity to short Wave, then I'll short Wave. I'll look for an entry at Luna. I don't know if it's gonna be short or long, but now I have an idea of the market. What should I look for? Because come on, we're not computers. We're not gonna actually analyze each and every chart, and trust me, nobody does. Nobody is able to analyze 17,775 coins. It's impossible. So what you do is you select a few coins that you think are going to give you profit. Now, most of the mistakes that I see in trading, that alright, I see it in my friends too. Alright, they open the chart, they look at Bitcoin. Bitcoin is not bullish. Alright, let's go to another chart. Okay, I move on to Solana. Now, I'm not finding a pattern on Solana. Let's move to the other coins. Now, this is wrong, guys. Alright, this is wrong. What I'm trying to explain to you here is select 3 or 4 different instruments and try to find an entry point. Even if there is another coin that's pumping 6,000%. Ignore that. Make a trading plan and focus on coins that you want to trade today. Which coins are strong? According fundamental, according analysis, like technical analysis, according this website. Now, the second website that I use to give me more confidence on those coins that I'm trading is Luna Crash. I will also leave the link in the description. So what do I actually get from this website is basically, it gives me the social interact of every coin. So what it means is that you go to Google and you type in Shiba or Bitcoin or NFTs, right? This actually gives me how much people, or the social volume of each and every coin, and which coins are people are looking for, which instrument should I be trading, right? So first I went to Crypto Bubbles. Now I know which ones are strong, which one are not, which one have been dropping a lot, which one have been rising up a lot, and why. Now I move on to my second website, right? I see the social interact. So I see right here, I have Pancake, I have XTZ, and the reason why, because XTZ is involving in NFT space, so of course they are bumping. Shiba Inu, everybody want to be a millionaire with it, Ethereum and Bitcoin. So from here, I can see which coins should I focus on, and I compare them with my Crypto Bubbles, right? I compare them and I see how much have they dropped, how much did they rise, what's the point of taking the trade. So this is the most important advice that you should know about. Now, moving on to the third mistake that beginners do while trading cryptocurrency is scalping up very quickly. What does this mean? Alright guys, so at the point of the time when I started becoming, let's call it a professional or intermediate trader, right? I was making $100 every day, right? And this thing came into my mind like, alright man, why don't I just add another zero to this and make it 1,000? So in a week, if I make $100, right? Let me bring up a new base to you. If I make $100, right? I'm gonna actually end up with $400 profit, right? And if I add another zero, then I'm gonna make $5,000 a week, guys, right? So this brilliant idea came to my head. But in the end, I ended up losing all the profit that I've been made in the last week just in one trade, because I did not notice that, and this also related to risk management. I did not notice that when I take a trade for $100, I lose $50 because I'm risking 50%. But when I take a trade for $1,000, I'm risking $500, which means in every trade that I lose the whole initial saving of the last week that I was working on to make this $500. So scaling up your trade very quickly is a very big mistake. If you want to go in crypto, you go step by step, all right? You want to become rich, take it step by step. None of us became rich, and I am still not even rich. I've been trading for more than 3 years, and I'm still just getting to know things, because cryptocurrency is big, all right? I'm not saying that it's going to take you years and years, but you need to educate yourself. You need to find yourself as a technical strategy that suits your style of trading, all right? This is what I mean. Moving on to the fourth mistake that beginners do while trading cryptocurrency. I'm sorry, the fifth. Following others' chat room. All right, this is our fifth one. I'm sorry. All right, what do you mean by this? Now, of course, I follow a lot of channels. All right, I follow a lot of chat rooms. I follow a lot of groups, and I've paid for a lot of VIP groups. All right, I've paid them a lot. All right, and if you go to my Discord right here, I'll represent you one of the groups that I follow, and I really love their analyzation. For example, Kaya group, you know, one of the groups that I've been following for a very long time. I have another group that I'm following right here on the top. Like, I have a few specific groups that I follow, but I don't basically go and take their trades whenever they say, all right, let's open a trade on Luna, for example. Let's take long on Bitcoin. Let's take long on Ethereum. That's what you're going to do, is you're going to end up with holding shitty bags. All right, holding shitty bags that the traders already took their profit from it. The reason why is, I'm not talking about private groups, right? I'm talking about now normal groups, and let's call them cheap groups. All right, they're still private, but they're cheap groups. Some groups, what they do is they will try to make you buy a specific instrument. All right, because they know that this instrument has a low volume. All right, so when you buy that instrument, they're gonna bump the price. If you are not fast enough, you're gonna be ended up holding shitty bags. I'll give you an example of that. So there's this channel that I'm following, right? And I'll show you an example of that. So what they did is that they say Pearl, all right, USDT buy long call. I'll show you on the chart what happened when they did that, right? So we go to the chart, we type this down. Look what happened, guys. They bumped the price all the way up, and they dump it all the way down. In this case, you are done. You are done. The reason why they did that, because they know that the market cap of this coin is small, and with this call, which they have a lot of, like thousands of members, they can bump the price. So what they did is they bumped the price around like 10%, and then dump it by around 15%, guys. All right, see that? 15%. This is when I say that do not follow those groups as a fundamental. What those groups do to you, they give you resources, all right? They give you analyzations, they give you trading plans. Use your own technique and apply them according what you see in the group. But do not follow those groups, because in the end, you're gonna lose all the money that you have. Now, this is my last advice to you guys. I hope you enjoyed the video. If you like the content, then please hit that like button, subscribe to the video, follow me on Twitter for more updates. And if you have any question that comes to your mind, just leave it in the comment. See you in another video.